Hey, good afternoon, everyone. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. We've got a really good webinar today. We're going to talk about exceptions and what are the most common ones that we do. We have a couple of subject matter experts that I'll introduce here in about a minute. We'll let everyone log in, and then I'll get my screen situated here. So, where is that? Sorry, guys. Why is that not popping up? There it is. All right. Great. So again, we'll get started here in about a minute. This is going to be recorded. We will get this out to you before end of day today. If we don't get to some of your questions today, we will have your account executive reach out. So give us about another 30 to 45 seconds and we'll get started here. Hope everyone's having a great day. For those of you that have served for our country, wish you a happy Veterans Day and thank you for your service. So appreciate it. All right, give it about another 30 seconds and we'll get started here. Hopefully everyone's having a great November and is going to finish the year strong and is already starting to work their 2024 business. So I know a lot of us over here are looking to turn the page. So, all right, still people logging in. All right, let's do this. Again, my name is Jeanmonod, Regional VP of Sales here at Angel Oak. Thank you for joining us. We'll get started here. Melanie Poor is the VP of Risk. Do I have that right, Melanie?
Of credit risk, yeah.
Credit risk, okay. Melanie, please introduce yourself.
Hi, I'm Melanie. I've been with Angel Oak 10 years now, and I've been in subprime or non-prime, excuse me, non-prime, 25 years. So.
Thank you, Melanie. Travis, please introduce yourself. I'm lucky to work in the same office as Travis, so Travis, introduce yourself.
Yeah, so I'm Travis LaLonde. I'm SVP of Operations here out of our Dallas Operations Center. SVP of Operations with a heavy emphasis on credit risk. I'm not your compliance guy, so let's be clear. I've been with Angel Oak for north of 6 years now and been in the mortgage industry for over 15 at this point.
Yeah, and thank you guys for joining us. I know you guys are always busy, but you know we've done over 100 webinars since September 2020, and we usually do deep product dives. We usually do marketing ones. So today we decided to bring you, the common exceptions that we do get granted. We always say on our webinars, what percentage of exceptions that we do. So we're going to get right into some of these exceptions. So in 2023, year to date, in 2023, approximately 20% of the loans submitted to Angel Oak for underwriting were in the process and closed, had exceptions to our guidelines and matrices. And there's another, 40% of the loans at the pre-qual level that get submitted to non-agency, which is our credit desk, which Melanie runs. 40% of those get approved. So just wanted to share those with you. Another thing I want to share, we usually run an hour on these. At the end of this non-QM exceptions report, I'm still going to take you through our website to show you quick quote and to show you marketing materials, which has been a really big, heavily used lately as people realize, rates aren't going to come down anytime soon and people have to market themselves a little differently. So let's move on. So I think it's Melanie or Travis, I'm not sure which one we said was going to take assets and reserves to these top 10 exception types that we give on a regular basis here at Angel Oak. So I apologize.
Yes. I'll lead off. That's all right, John. So these, again, as John articulated there, we have the top 10 listed here. They're not in any particular order. These just happen to be the 10 most prominent. It's mostly alphabetical more than anything, just to keep it a little cleaner. But the top one, assets reserves. So a topic near and dear to everyone's heart, good old reserves. You get to the tail end of the process and Usually your requirements anywhere from 6 to 12 months with us anyway. So, a lot of those exceptions are, need 6, I've got 3, need 6, I've got 4.5, need 12, I've got 9. It's not generally, or I would say very rarely, an entire waiving of reserves in general. So I need 6 and I have 0. So, that's obviously a little bit different circumstances, but anything where you're meeting half or thereabouts, the reserve requirement, generally speaking, we're pretty lenient, and we'll try to find some compensating factors to make that work for you.
Yeah, thank you, Travis. Before I get to Melanie with the credit and the minimum, trade lines, that's why it's really important to reach out to your account executive. Your account, I think our average tenure here at Angelo account executive is 5+ to maybe 6+ years. So, they know what typical exceptions we'll get. But it's also critical, we talk about, the character, and really pulls it all together. A really tight, what drives these exceptions is at that pre-qual stage, most of the time, is a really, really tight loan application. So that's a critical. So go ahead, Melanie, give us, credit minimum trade lines and maybe a couple examples that you've seen.
Yeah, minimum trades, most of our programs are 2 for 24, 3 for 12. But a light credit user isn't necessarily a bad thing. If they don't have past DROG, we make this often. And there's a lot of times where I get it and they're asking, we don't meet the trade requirement, but I don't even consider it an exception because they have years of credit debt. They're not a heavy credit user. So this one's a pretty easy, as long as it goes along with the loan amount.
Right. All right.
High credit of $2,000, light on credit, and then $1 million loan.
Yeah, and I almost forgot what was the recent enhancement. It just has to be open, but no activity. That was a recent enhancement, Melanie?
Yes.
Yeah.
Yes.
So, go ahead, sorry.
Yeah, well, and even if they're closed, I mean, like I said, that to me isn't a bad thing.
Okay. Yeah, and again, some of the things I've seen some really, really good AEs do this. If an auto loan stopped, let's just say it was in April and it was only open maybe for 8 months, and they have another one that's been open since then for 6 months. Tying those two together it's usually done at the pre-qual stage because the AE is an expert in that area and knows how to tie those two together. So, which is really, really great. Yeah. So, Travis, talk about, the credit and the payment history specifically towards housing, and what some of the things that you've seen as far as an exception or, stuff like that.
Yeah, so your housing history, right? It's going to be a requirement on all programs, generally 12 months of primary housing required. This is a big one, right? This could be an overarching compensating factor for you if you've got something that's a little bit more robust, and otherwise it could be something that's becomes a little bit of a thorn in your side if we don't have it documented properly. So there are a few different subcategories within this one. It could be that you just simply don't have the 12 months. You've got 6 and maybe 6 where they were rent free for whatever reason. They were between houses, living with family, something to that effect. Maybe you're on our ICF product where we require the primary residence to be owned and not rented. So I saw a few exceptions in this category for we have done a few situations where they are renting their primary. Important to point out that in those situations, the property they're purchasing is very similar to their investment portfolio they already have. We don't have any real risk concerns over, them occupying said property on our ICF program. So a few different things that obviously have to fall in line for that particular one. And then lastly, in this category is just simply payment history, the delinquencies, right? So a 1 or 2 off that maybe doesn't meet program guidelines, but no other real derogatory situations happening for that borrower, and kind of easy for us to overlook one additional blemish with the right compensating factors.
And again, this is all done up front, at that pre-qual stage, and Melanie's the cog behind that that helps us get these approvals. And it's your AE that really knows that, hey, this is a good deal, and and I believe in this, and it doesn't meet the guidelines. And but this gets done up front at the prequal stage, so we're not putting your referral sources or your borrower in a bad spot. It's done up front. So like we do on bank statements, we calculate the income for you up front, and that's the income that gets used throughout the entire process. So Melanie, take us through the next one: credit judgments, collections, and tax liens.
Right. Collections is probably the most common here that we do. All of our products are no collections in the last 24 months. But we make that quite a bit. As long as they're not going to be on title, we've left them open. I mean, nothing extensive, but yeah, they're isolated collections, and we definitely will leave them open. Tax liens are case by case, but we need the information. We need to know the tax year's owed and what kind of payment plan. We can look at those, but if it's multiple years that they owe, that's probably not getting approved. But if you do submit it, definitely give us the information on the payment plan that they have.
Right.
How long they've been in it.
Yeah, and again, this is all done up front, so and that's what I like in that too, making sure it's going to follow. And when we get that exception, that follows it all the way through underwriting. So that's the beauty of it. That's all documented in our CRM, and that follows that file all the way through the house, all the way through in-house to underwriting. So
right.
Travis, go ahead, Mel.
Well, I was just going to say, and that's why let us know. I had one with it was a mortgage late, and we kept getting the story that it was in error, and maybe it was, but they could never prove it. We ended up getting it approved, but it was kind of a scramble at the end. Like, if we know what we have in the beginning, and then we can go ahead and get it approved, and then no one's stressing at the end.
Yeah. So we already had a couple, Travis, before we get to credit and forbearance, we also had a question here from Kelly. What about medical collections? Do they count?
So great question. We take a similar stance to I would say the vast majority of the industry. We don't dwell on medical collections. We're generally going to allow those 100% of the time, really. Those aren't really going to be impactful for the sake of this conversation.
Thank you. So Travis, while you're hot, go to credit and forbearance, please.
Yeah, absolutely. So forbearance, pretty simple, right? We have seasoning requirements just like everybody else. So the vast majority of the exceptions here are just we did not have that seasoning met. Our current guideline on most of our programs is really up to 6 payments missed, so long as they've then they're current and they've made 3 payments after that said forbearance period. So I would venture a guess that's probably pretty consistent with the market. But again, if they happen to be in forbearance for 8 months and we can still prove the three payments, stuff like that, we're generally very lenient on. Again, so long as the consistent theme is going to be compensating factors, right? We've got to have ourselves a good loan, and if that's the case, then as Mark Lively, my superior, always says, we're not going to let a singular guideline get in the way of doing a good loan. So that's another situation where we would press on.
And just a couple of this is being recorded. So this is being recorded. We will get this out before end of day tomorrow. If we don't get to some of your questions, we will have your account executive reach out to you. So just but keep the questions coming. There is another question here, Melanie, before we get to program and loan amount. Danny's asking about, I noticed FICO isn't listed here. Is there no flexibility for credit score? These are just the most common, these are the most 10 common. Melanie, I'm going to let you ask about, the FICO score.
For the most part, yeah, we will make FICO exceptions. Probably 10 points is about the max. We have done more, but yes, we do make FICO exceptions.
Yeah, and we're going to get to this, what are those compensated factors? We're going to get to that, and we're going to talk about what are the most common compensated factors there. So Melanie, let's talk about program and loan amount.
Yes, and we did just increase it to 3.5, but I don't have any good examples of loan amount. If you are going to be over 3, it really does. I mean, and we've gone to 4 before, but it'll have to be in the 60 LTV range. Then we, I guess, minimum 2, because we have what portfolio selects is 125, and then
Right.
75 on the ICF program. Yeah, so the minimum is definitely where we've seen a good bit of these exceptions too, just as much as the maximum. The minimum comes into play every now and then. So so long as it's in the ballpark, we're usually pretty lenient.
Cool. Right. So Travis, talking about, and we're seeing a lot more of these, and just for the record, we did launch a closed-end second loan about 20, maybe 30 days ago. So, but Travis, talk about, the type of exceptions you get on cash out, and we're seeing a lot more of this. And really, I would stress to a lot of people on this call, we talk about you being a loan advisor, consulting. I was listening to a Barry Habib presentation about 2 months ago, and really, you almost need to be these days a debt consultant. With we've got $1 trillion in credit card debt out there. We have $1.5 trillion in student loans coming due, and in 2022, I think it was $150 billion. It was charged in interest just on credit cards. So, Travis, talk about some of the program cash out amount exceptions that we've gotten.
Yeah, so cash out amount obviously is going to be simply the cash in hand, right? So for the vast majority of our products, you're looking at $500,000 is our maximum, but we've definitely gone above and beyond that, especially up to the $1 million threshold. I'd say very likely, especially for your stronger credit borrowers, we generally won't be overly concerned with going a little over that 500, especially up to $1 million. I believe as recently as today, Melanie, we had one that we went over that.
It did 65 and it was 750, which is, so that was a 5% LTV exception for the cash out.
Yep. So, we're definitely seeing that a lot, to John's point, in the market right now. With everything going on, certainly a lot more cash out transactions, and that that closed-end seconds definitely picking up some steam as well from a cash out perspective.
Yeah, and I think it's really important for everyone on this call to realize you can create your own little cash out pool, right? If you really look at statistics just across the nation, and I know a lot of people in some still hot markets, the average home in America has appreciated since 2019 around 48%. So people have a ton of equity in their house. So, call up some previous people you close loans with. Yeah, they might be in the 4s, but the average credit card interest rate right now is 25%. I mean, I know someone told me the other day a Macy's credit card was 31.47%. Yeah, I just see. I still can do that, Melanie. Wow. Yeah. So pay that one off, huh? It's like, so really, if someone might be in the 4s there, but they might be at such a good low LTV and paying off that credit card or that student loan debt, it might be worth it. Call them up, have that conversation. And guess what's coming up? Holidays, taxes, everything's coming due. Get that cash in hand. So, just really think of different ways. Get with your account executive. They have all these tips and tricks on how to market yourself differently. So again, let's move. I'll stop. I'll get off my soapbox. But we talked. I've been talking so much. Who's doing Payment Shock? Was it you?
Payment Shock, yeah. Payment Shock. This is one I see a lot, definitely in the pre-qual stage, and we grant it pretty often at 80%. This is where we're going to talk about comp factors later, but the assets is definitely important to know when making the Payment Shock exception, and we're definitely more aggressive if it's not a first-time home buyer.
Didn't you say what was one you just did the other day?
It was 550% Payment Shock, and yeah, they had a mortgage on credit since 14 with, I think they had an isolated late. So
Yeah, but what I want everyone to hear what Melanie just said was, that's where assets come in, and that's where a complete 1003 really does come in, and that's where that conversation, I don't know if I wanted to have Travis and Melanie do earmuffs right now, but this is where this is where we talk about it on our other webinars. Your AE is your confessional booth, right? You need to pour everything out to them so they can help you position these liens and position these loans, I should say, with the right assets listed on there. Where they've been living, how long they've been living, what have they been paying, what we just talked about, payment shock. That's critical. You don't know how many loan applications we get where it has the address where they live, but nothing where they're paying. And, so help us help you, help us, so that's kind of what I would really, a strong 1003 helps tell that story. So Travis, let's talk about square footage, property square footage.
Yeah, so this one may seem, tedious to some, right? And it can be, but from a single family perspective, we have a minimum of 1,000 square feet. From a condominium perspective, it's 600 square feet. And really what we're trying to point out here is with a good appraisal and strong comparables, we're really not going to bat an eyelash here. I mean, it's really going to be a smooth sailing for the vast majority of the situations. 1,000 square feet, maybe on a single family, down to 600, call it, give or take, with the right comparables. A condominium, the minimum's only 600 to begin with, so I wouldn't say we're going to go down to 200, but we're probably good down to 500 with the right comparables. It's really going to come down to the quality of that appraisal. If we've got ourselves a good appraisal, strong comp selection, generally this square footage piece is not going to be enough of a hang up for us to not do a loan.
Right, right. So Melanie, let's talk about condos, really concentration in Florida, but in general, let's talk about, the eligibility of condos and what you see.
I would say the common exceptions are the budgeted reserves. We're 10%. We actually, in our guidelines, we have for lower LTVs, some lower percentages, but we make that exception quite often. And then the delinquency probably. So we're 15% and 10%, depending on number of units and the amount. That we'll go slightly above that.
Okay.
For sure.
Yeah, and then single entity ownership is another one I saw a few exceptions for as I was pulling the year-to-date data. We've definitely done that as well. Our maximum for single entity ownership is 20%. I saw a couple exceptions in there for 25 and thereabouts for a single entity ownership. To Melanie's point, the delinquency 15%. I saw some in there for 16, 22. So we're reasonable on that aspect as well.
Yeah, and I know it's getting past that occupancy. I mean, not the occupancy, but the ownership. Especially if our borrower is buying their primary, I've seen that exception a good amount of times for that. So not a good. I mean, I've seen that exception given, provided our person's either buying it as a primary or a second home. So yeah, that's great to know. Let's move on. I know we talked about these are the top 10 exceptions. I think we're going to talk about on the next slide. Let me see. Yeah, here are some common compensating factors that get us to, get us past those top 10 exceptions. And again, we have a lot of different exceptions. We just asked Travis to share the top 10. So there's a lot of other exceptions. Like Danny asked earlier about the FICO score, and Melanie addressed that with 5 to maybe 10 points and stuff like that. So also, LTVs and stuff. So Travis, do you want to take, the compensating factor, the first one there, loan to value?
Yeah, so loan to value is anything greater than 10% less than our maximum is definitely going to be a glaring positive for that particular file. Anything beyond that is just even better. So the LTV is definitely going to have a pretty dramatic bearing on your exception potential, so to speak. So that's definitely one of your more prominent compensating factors.
Okay, your internet was
And
slowing
then
down.
we've got reserves, pretty
we got the
simple
gist of
there.
it. Go ahead.
Anything that you're double reserve
Hold on, Travis. I'm gonna let
requirement,
Melanie.
which
Travis,
for
hold up, because your voice is your internet connection is not great right now, so it's slowing down. So I'll let Melanie take the reserves. Go ahead, Melanie.
Yes, yes. Additional assets. This is, especially with its relative, payment shock or anything like that. But assets, borrowers' assets are huge.
Yeah.
Compensating factor. Do you want me to go ahead and do
Yeah,
the next?
unless Travis has come back live a little bit. Yeah. No, all right. We're gonna put you on hold, Travis. Sorry. Go into payment history, Melanie. Give a couple examples of that.
Yes, payment history. Mortgage on credit obviously is great to see, and strong mortgage history goes a long
how
way.
am I now?
A little better. Go ahead. You want to take a shot at it?
No.
Sorry, Melanie. Keep going.
How'd you do that, Travis?
Do the heavy lifting, Melanie. Let's go.
Yeah. I mean, credit is everything. Obviously, it tells the story of the borrower. So, strong credit depth, that goes a long way with exceptions.
Go ahead.
No, go ahead.
You want to touch on residual income? We talked a little bit about this from a standpoint, mostly for full doc, right?
Yes. Residual income on full doc is definitely a comp factor. On bank statements, I mean, the calculation may or may not be exactly the income, but if it can be, if I look at the assets and it's reflective of the residual income. If they make, $100,000 a month and they have 13,000 in the bank, and something doesn't seem, So but if they have $1 million, then and they don't get $1 million. I don't mean that. I just threw that out. It just needs to make sense for what their income is.
Yeah. So that's the most common. Those are the most compensating factors that we see that help us get a lot of exceptions. And again, a lot more. Those were just the top 10. I just want to do a little housekeeping here. This is being recorded. We will answer all your questions either via here or the AE. When we are done with this section, if Travis and Melanie will jump off, and I'm going to take you to our website. Going to go through the quick quote, the quick call, and then the marketing portal, because it seems lately a lot more people, and I know why, a lot more people are signing up with Angel Oak and not only taking advantage of the great marketing portal that we do have. So I think at this portion, Melanie, I think we were going to, unless Travis has come back to us, I think, Melanie, you want to talk about maybe 2 or 3 live, not totally live, 2 or 3 examples. You're back, yeah. You were going to talk, Melanie, about, and this is live, just so you know, this is not recorded, this is live, it's going to be recorded, but you were going to talk about 2 or 3 examples that you've just recently, take us from maybe the start to finish of us closing a loan that was a loan that had great compensating factors, and we were able to get an exception. So if you got a couple examples of those, that'd be great.
Well, I think I mentioned the 550 payment shock with the mortgage history on credit. They had a thing. The cash out exceptions over the max. The borrower had years and years of mortgage history. So I've seen them as high as 70 with $1 million cash out. But again, I mean, the borrower's credit warranted that type of quick step.
Yeah, so I think, when we look at things like that, it's, and again, that's the great thing about working with our account executives. They're gonna really push you up front to get that information before we deliver it to what we call our credit help desk, and they're gonna hopefully tie that look pretty bow around that borrower and around that transaction for us to say a yes to. So I think it's extremely, extremely important. So I don't know, Travis, if you've got anything else that you wanted to add, or Melanie, if there was anything else, because if not, we're 30 minutes past the top of the hour. I can cut you guys loose and then move on. So. Travis, you're the best. Well, hey guys, Melanie, Travis, I've known Melanie 20 years. We met when we were 4. That was the joke, right? And I get to work day in, day out with Travis, and we're gonna let them go so they can get more exceptions and close more loans. So I do want to thank you guys for your time and your expertise and your professionalism. I really, really appreciate you guys.
Thank you.
Thanks, guys. Hey, like I said, we're gonna go. We've scheduled an hour for this, so I'm gonna go into our website and go through Quick Quote and our Quick Quote, our pricing tool, and how to submit a pre-qual, and then we'll go into the marketing portal. So this is still being recorded. Again, thank you, Travis. Thank you, Melanie. But just so we're here on our website, there's 2 ways you can get to our Quick Quote, either up here near the top by the bridge or down here middle left of our website. So so you click on that button and scroll down a little bit. We ask a few easy questions. Usually a big part of ours are broker relationships. I'm going to put a $750,000 loan amount. Our average credit score is 740. For average, I'll do 75 LTV. The state of Florida, 0 times 30 in the last 24 months, 1 unit purchase. I'm going to put in a bank statement deal, 24 months business bank statement, owner occupied, and within, we have an AE, Jerry Calderon. He says his 8-year-old daughter can run this scenario for him and prices stuff out for him. So it's so easy, an 8-year-old can do it. And here's what you have. It displays, we have 2 bank statement programs, bank statement and bank statement elite. Today they're priced the same, 75% LTV we requested. They're eligible for a 90%, but at a 70%, 75%, the par rate is 8.125. Not that far off from conventional rates, right? Gives you some brief information here about, seasoning requirements. You can see the difference between bank statement and bank statement elite is the seasoning on a housing event, and then reserves required. Again, you listen to Melanie, you listen to Travis. That's a very, very common exception we get. And then if you click on here, you get a rate stack of, here we are. This is par. I'm just going to click on this. So we talk about, this is not locking the loan. It's really easy to do. Well, how do I get the 1003 and the credit report to my account executive? Just click here. Again, you're not locking the rate, and you select that, and then you scroll up. Most people don't have a MISMO 3.4 file, so we just hit next. And here's the information you already put in to the Quick Quote tool, and select I'll select our Miami rep, Carlos Bentoncourt, and you put in your company information. I'm not going to put that. You put your NMLS. All these fields with the asterisks are required, and then it's just as easy as dragging and dropping a PDF of your 1003, your completed 1003. We went through how we get exceptions. Your PDF of your credit report. We don't need a 1008, and then your bank statements. And that's it. And put any additional information maybe you and the AE talked about, and you hit submit, and that goes directly to the account executive. And at that time, the account executive is going to make sure all the bank statements are there, and they will submit that to to our bank statement review team, where that's all they do. They calculate bank statement income all day, and probably within 24, maybe 48 hours would be on the long side, but within 24 hours, you will get a pre-call back. And again, that's the income that's going to be used throughout the entire process. So see some questions coming in here. Valerie wants the matrix. Okay, we'll work on that. Yeah. So thank you, Travis, for saying it's very easy to use. He's talking about our quick quote. Thank you, Travis, for that shout out. So I'm going to go back to the home page, and I'm going to take us to, we talk about the underserved borrower, and this borrower is really underserved. Now, I'll just throw another statistic out there, and this is about your self-employed borrowers. In 2020, new business applications grew by 25% over 2019. It was the largest increase in new business applications in over 10 years. And in 2021, new business applications grew over 2020 by 22%. So you have the fastest growing segment of the workforce that are eligible for the bank statement program. So guys, underserved borrowers, don't use tax returns. We just calculate their income using bank statements. So the quick quote we just went through, how to submit a pre-qual. This logging into our marketing portal, you do need to be an approved broker. So just want to make sure everyone's aware of that. Maybe the Wi-Fi issue. Oh, there we go. So it's pretty easy. All right, so we're logged into our portal, and everything you'll do is in our portal. So right here is our marketing portal. I'll go through our flyers first. They're very, very popular. We have about 24 to 30 flyers in here. I'll use the bank statement. It's our most popular program. I know Luke is close loans with Luke. He's at Supreme London. So Luke has filled this out for him, and it will populate every flyer in there. So really easy. He's filled it out for the bank statement flyer, and he can print any other flyer in there, all his contact information. We've seen loan officers co-brand this with their realtor for open houses. And again, we have all these different flyers in there. We have it for our second most popular program, debt service coverage, for our full doc program. All these are available to you. I've seen more and more people use our marketing portal, but I still believe it's a very underutilized tool for you to market yourself differently than just I've got rates, I can close loans quick, and I'm responsive. So let's look at another very popular area for social media. Everyone's posting stuff out there. We've got one for our asset qualifier program. We have one for our bank statement bank statement program. We have it for Instagram or Pinterest. We have it driven for borrowers. We have it driven for realtors. We have it for Facebook and LinkedIn. Simple, copy and paste. We have the copy here for you already. It's easy. I promise you, you will get clicks. Another question. Thank you. I wanted a price along. I do get commission. Yeah, so that's a great question, Shawanda. I hope I pronunciated that correctly. We have different options, either lender paid or borrower paid. In this, what I'm seeing more of in a rate sensitive environment, I'm seeing more loan officers go borrower paid. So, but we do have two options. So thank you for asking that question. So we have all this cash out refinances. We talked about an exception on cash outs. We have cash out flyers for you. Investor cash flow, that debt service coverage ratio program, this is all driven for you. So I encourage everyone to really try using these. Put it in don't wait till the new year to start marketing yourself now. Do it now. Plant those seeds now, and I'm telling you, you will get business before the end of the year. We have whiteboard videos. I won't play this, but these are all just 1 minute, very generic bank statement, but it kind of gives you the scenario on why that borrower is having to go bank statements, why that borrower wants to go investor cash flow. These are really creative and timeless. Sorry. Back to the marketing portal. This is probably the most powerful presentation you can do. It is our realtor presentation. And, you know, we didn't do this time, and it was my mistake. We were going to launch a poll who's originated a non-QM loan in the last 12 months, but I can tell you what statistically, what we see, 70% of you on here probably have not originated a non-QM loan. You know, we all know, 63% of mortgages are between 2.5% and 4%. So if you're waiting till next year for rates to come down to start doing business, you're missing the boat. You are missing the boat. Rates would have to drop over 300% to attract someone in a 63% or a 4% link, and that's not going to happen. It's probably not going to happen for a couple of years. So get used to learning non-QM. This realtor presentation helps you educate your referral source, because if 70% of you haven't originated a non-QM loan, I can bet you it's safe to say 95% of your referral source doesn't even know these loans exist. And what's powerful, any of our AEs across the country will present on your behalf. They'll go in there, and I'll use Valerie. She's been a great question person here today. If I was presenting on Valerie's behalf, I'd go in there and say, hey, Valerie, you know, we're going to talk to your referral source. I'm just one of your investors. I don't even tell them I'm with Angel Oak. I joke about it. I'm almost in the witness protection program. I don't bring cards. I don't bring, you know, logo stuff. I just talk. I'm one of Valerie's investors. And as I go through this presentation, when you get a self-employed borrower that can't qualify using their tax returns, who are you going to call? You're going to call Valerie. And 9% of the loans Angel Oak closes on our bank statement or 1099 program are actually realtors. So do the math. You get 12 realtors in a room, the odds are you're probably going to get one of their loans. So it's a really great, easy presentation. We can do it via Zoom. We can do it in person. It's a very, very, very powerful presentation. We even have a flyer for it to market it for you. We've developed all the tools for you here to, you know, we have an AE down in Austin, San Antonio. Christy says, Angel Oak has invested a lot in our marketing portal for you on your behalf. And we always ask the AEs that we do presentations with, what does using our marketing portal cost you? It doesn't cost you anything. It's free. You just have to be an approved broker with Angel Oak. So anyway, I've talked a lot. It's a quarter of the top of the hour. So we've answered most of your questions. Again, housekeeping, we will get this recording out to you before end of day tomorrow. If we did miss a question, we will get your account executive to reach out to you. So for anyone on this call who's closed a loan with Angel Oak, thank you for your business. Those who haven't, give us a chance. And for those who have served this country, thank you, and wish you a great Veterans Day. And on behalf of everyone here at Angel Oak, thank you. Have a great day, and have a great rest of your month and year. Look forward to working with you. Thank you.